Hey everybody, Economic Ninja here. I hope you're doing great. Got a lot of information out of Amazon, and another Amazon insider brought me some information. Was nice enough to let me know exactly where they work. However, and verifying all of this, the person just recently uh, gave me this information and said I can't. Obviously, I don't want to share the name or the locations, but we were talking about the amount of time off that they have. We've been talking about how Amazon insiders, the higher ups, the management level, high management level, are studying everything about the consumer right now because they are freaking out. I've got a story out of Zero Hedge about Amazon earnings literally completely collapsing. This is the biggest bellwether indicator. This is the biggest indicator of where the economy is headed. Okay, because as companies like Walmart, like Amazon, and other companies have a problem selling 90% of the items that they used to sell, which is just essentially crap that we don't need. Okay, they're just extra stuff that make life more fun, I guess, and exciting. But as inflation gets worse and these companies can't sell 90% of their goods, they're going to collapse. They're going to lay people off. It is going to exacerbate the problem, and so this is why we want to keep going over this. So let me share with this insider said, um, the voluntary time off that they were talking about, they actually were in a pretty busy part of the country. I know this for sure. And they said they literally had 1 week blocks of time off that they were giving voluntary overtime. I'm sorry, voluntary time off. And this was 1 week blocks. Like, hey, you know what? You want to go on a vacation? Go. Like, we can set it up right now. We are so slow. Let's do this. Um, they had never done that to this person's knowledge, and they are planning on sending tote work to these other places because of certain distribution centers that used to be busy or slower. That's why you're seeing all of these uh, closures all around the country of these Amazon facilities that were being built. All right. Now, check this out. This is out of Zero Hedge. Um, it's entitled Amazon Erases 12% Gain, Turns Red After Revealing Sharp Slowdown in Amazon AWS Growth. Now, before I read that, or as I'm reading that, I want you to know I've got another insider that sent me information from a large trucking company out of California. And I want to talk about that. It's I don't remember if this person said I could share this information or not. I want to say it is an owner of the company. And so that's why I'm going to do this, talk about, I know I can share this info, but as far as this person's identity, I don't know if I can or not. I'm going to share that with you too, because this goes right along hand in hand, this shipping info, the cost per container and everything, along with what's going on in Amazon. Okay. So again, Amazon erases 12% gain, turns red after revealing sharp slowdown in April AWS growth. Everything was okay with Amazon stock, soaring as much as 12%, and then suddenly Amazon stock erased all gains and turned red during the company's analyst earning call. So right in the middle of the call, this happened. There was initially some confusion what sparked the plunge, but it eventually was revealed that during the call, Amazon said that customers continue to evaluate ways to optimize their cloud spending in response to these tough economic conditions in Q1. And we are seeing these optimizations continue into Q2 with April revenue growth rates about 500 basis points lower than what we saw in Q1. Now, this is absolutely very interesting to me to think that now it is hitting the consumer is now evaluating the cost of what they're paying for Amazon cloud services. All right, so that's way even deeper than just extra stuff, extra fluff, electronics and things like that, doodads and stuff that are sold on Amazon. Now, as a note earlier, AWS did a little better than analysts had expected in quarter one, but that might not be worth much if growth continues to drift towards single digits. Now, let me dive in again, and that 4 or 5 part series that I did on the Amazon management meeting about what they're evaluating as far as the consumer. It's interesting that the numbers for Amazon AWS came in better than expected compared to Q1, right? But it's their words. You see, if you think about it, think about this. They said right here, and this is their quote again. Customers continue to evaluate ways to optimize their cloud spending in response to these tough economic conditions. We are seeing these optimizations continue in Q2 with revenue growth rates 500 basis points lower than we saw in Q1. Okay, so again, this is the Amazon uppers totally evaluating, digging deep into the consumer because they see the change. And you know what's funny? With a large company like that, that literally does so much, it carries so much of the national retail sales amounts, right, on its back, just a slight change that you and I may think is very small, they are like honed in. So they are super sensitive to changes in the weather when it comes to the consumer sentiment, right? They are constantly looking to optimize their sales, their profits. If there's a product that it's worth not selling, they get rid of it, right? And so they are super hypersensitive. So this literally, like I did in that 5-part series, and if you haven't checked it out, go check it out. It's about an Amazon insider sharing this information with me. It is literally coming out of their speech in these earnings calls, which is indeed taking the stock and causing it to crash. I mean, literally erasing 12% just during the earnings call. The company tried to provide some favorable spin, with the CEO saying that he is pretty optimistic that we will have a chance not just to recover to where we were pre-pandemic in terms of operating margin, but I think there is an additional upside to some of the opportunities we've identified. But by now, it was too little too late, and the stock had erased all of its earlier gains and was on the verge of turning red for the day. You know that as they're doing these earnings calls, they are literally watching that stock, and they probably have a couple of different dialogues or different narratives that, okay, the stock's turning bad, let's do this, let's try and pump it full of hopium. So with 3 out of the 5 FANG stocks, which of course is known as Gamma ever since Facebook's rebranding to Meta, having already reported solid results, helping push the market back into the green for the week, investors are keenly looking at Amazon earnings after the close today to almost round out the picture for the resurgent market generals, while could set the tone for the rest of 2023. And that is literally an understatement. It is setting a tone for 2023, and that tone is down. So as previewed earlier, Amazon is expected to post sales of 125 billion, right? Up 7.1% from a year earlier. Now, investors also want to see signs of CEO Andy Jassy's cost-cutting measures, which include cutting 27,000 corporate employees, are helping to slash expenses and boost profits. Amazon had 1.5 million employees at the end of 2022, all mostly blue-collar workers in its warehouses. And in addition to the corporate cuts, Amazon tends to trim its warehouse workforce after the holiday shopping season. Now, you've already seen, we're getting tons of information on the email threads of what's going on at Amazon. And it's big. If you guys work in Amazon and you want to share your stuff, ninjabrohawk@gmail.com. Please do not ask for financial advice. I cannot do that. But let me know boots on the ground stuff that's going on, because I can bring this to the people. Because think about this. Think about how much value Amazon stock alone is for the stock market. It literally is helping prop up the stock market. As Amazon falls, we're going to see the economy fall. All right, it is so evident. Now, of note, Forex headwinds were a factor in the quarter, with Amazon booking 2.4 billion unfavorable impact from year-over-year changes in foreign exchange rates throughout the quarter. Excluding that impact, net sales increased 11% in quarter one compared to the first quarter of 2022. Think about that. 2.4 billion in unfavorable Forex impact, the exchange rate between the dollar and other currencies. And let me ask you this. Do you think, in the comment section, put below, do you think that we are going to see more wild swings or even wilder swings in the rest of 2023 and 2024 in Forex exchange rates than we have in the past? I believe that we are, especially like just on news recently, what happened in Japan and the yen taking a massive, massive tumble. So the story goes on more and more to talk about the what's going on in Amazon, like what's selling and what's not. But I will tell you this, the total employees, and I'll show you this. This chart is from 2010, okay, to 2023. This is the Amazon employee round. This is how many employees 2010 2023. They're just running up, and now look, it's starting to dip. And like it said before, 1.5 million employees. So they just fired 27,000. And I've told you that I'm expecting 10,000 layoffs a day on average in the month of September and October. I'm telling you right now, there is so much more room for people to be laid off. If you're working in Amazon, seriously consider where you are. Do you have a side hustle? Do you have a second means of income? Start to prepare your finances for literally a global economic collapse. That's not doom or gloom. This is literally happening right now. And that's not my hope for you. Now let's share something right now from the Insider, the freight company down in Southern California. I asked if things were out of this world, and he said, yes, it's wild. Prior to COVID, in the first quarter of COVID, warehouses for distribution used to cost 85 cents or less per square foot. Inventory piling up forced prices to the $1.85 to $2 a square foot mark. We are still sitting on inventory as retail is down, keeping the prices for warehouses up. So think about that. That's additional costs for these companies, just literally having to store the inventory. As of right now, there's still massive amounts of inventory sitting in warehouses trying to be sold to you. Ocean prices back in 2014 used to cost approximately $900 to $1,100. The price for ocean imports for the past several months, from its peak of 18 to 20,000 a container, is now $1,000 a container, with demand being down. This week they moved up to a proposed rate of $1,200 to $1,400, since $1,000 is sitting at a loss. Now it's interesting. They're losing money at 1,000, so they got to run the prices up. But what happens if people go, that's just too much? I can't make money selling the goods in the container if I have to pay between $1,200 to $1,400. This is going to be very, very interesting. I have trucks that go into the ports and drivers have very little work. We used to pick up approximately 100 containers a week. It's down to between 15 and 20 containers now. There used to be a shortage of chassis several months ago, big rigs. Now there are so many chassis have to be taken to an offsite location. Wait, actually, I might not the big rigs. I think the chassis, correct me if I'm wrong, are the like the piggyback, the trailers. I'm always used to thinking chassis as like the Freightliner, the semi truck. In regards to your Amazon FBA warehouses video, they are holding more inventory and bleeding it slowly to Amazon. In regards to your Amazon FBA, warehouses are holding more inventory and bleeding it slowly to Amazon, keeping the warehouses at a higher level. So overall, logistics is in an awkward position with expensive building and revenue dropping and companies being stuck in these expensive buildings. I see a lot of subleases coming on the market with people trying to get out of buildings. Look, like I said, commercial real estate is being completely hammered, and we need to do something about it now. And it's when I mean do something, you need to prepare your finances, because as this thing comes down in the fall, it's going to be no joke. It's going to be all hands on deck. Guys, I hope you got something out of this. If you are an insider of a company and you would like to share things and me keep your identity private, please hit me up at ninjabrohawk@gmail.com. Again, I need to do vetting, a certain amount of vetting to vet you are who you say you are, and then keep your identity quiet, because these are the times I want to bring news before they happen. As this economy collapses, we need to be ahead of the curve for everybody. All right, guys, we're all in this together. The Economic Ninja is out.